Welcome back, everybody, to another episode of DeFi Revelations. Today, we have Alex, the founder of Possum Labs, on. Fantastic discussion. We're going to talk about, what Possum Labs has built, so far with the portals, which allows you to get your yield up front. And then we get into Nexus, at the end of the day, which I think is what they're very, very excited about. They looked at some of the problems, with DEXs, in the space. And, what I really like about Alex, and I think the team's got a good focus, is that they want to focus on things that they think they could compete on. So a lot of people are focused on concentrated liquidity right now. A lot of DEX models are focused on solving that and providing that and doing really, really good with that. But there's still a part of the market that needs to be served for like full range liquidity. And I think they're doing a really, really thoughtful job about solving some of the pairing problems, some of the capital efficiency problems that have plagued DEXs so far. So we get into all that. We get into what their strategy is going to be when bringing this to market, and it was a really, really informative discussion. So hope you enjoy it. As always, if you do, please like and subscribe, and we will see you on the next episode of DeFi Revelations. Cheers. All right. Welcome, everybody, back to another episode of DeFi Revelations. For those that don't know me, Kirk, the head of BD for Revelo Intel. And today we've got Alex, the founder of Possum Labs. How you doing, Alex?
I'm doing great. Thank you for having me.
Absolutely. We're really excited to have you guys on today to dig into all things that Possum has built so far, and obviously, dig into some of the new innovations that you guys are developing and coming out with as well. But before we get into that, definitely want to know a little bit about yourself, your origin story. Tell us how you got into crypto, and then kind of lead us into, why you founded, Possum Labs at the end of the day.
Yeah, great question. So I have a background in traditional finance, actually, derivatives trading and briefly in institutional asset management. And then in 2017, I heard about Bitcoin and really dove into that and was immediately fascinated by the idea of, okay, you have a digital asset that can be transacted all over the world permissionlessly, and it has a finite supply, which at the end of the day eliminates all of these inflation issues that, especially in the recent years, we see all over the world, right? So this is not new for anyone who works in finance, and is part of the calculation in all of investment decisions and so on. So I immediately dug that concept and, of course, wanted to know how that actually works, and really researched Bitcoin deeply. And then shortly after, maybe a month or so into my research, I came across Ethereum. And then I understood, holy moly, this is not just about replacing money or a store of value. With Ethereum, the smart contract capability, you can actually redefine finance as a whole. And that was the early spirit also of DeFi and crypto in general, to actually disrupt the traditional financial system and replace it with something that is way more efficient and I guess equal, or giving equal opportunity to anyone across the globe, right? Because there are no central entities, gatekeepers, and so on. And I found this very, very fascinating. This spirit of really free markets, essentially, right? Because I think personally that's we all are being raised with different backgrounds, right? For me, it is really that the libertarian, if you will, kind of mindset, believing in free markets and the power of free markets. I also want to make a distinction there between capitalism and free markets, because capitalism as such tends to actually destroy free markets as the first move, because having a monopoly in a capitalistic system is obviously the most profitable thing that you can do. So there is free markets is not is a part of capitalism, but capitalism does not necessarily contain free markets. So the idea of crypto and DeFi for me always was that there are free markets all over the world, and that is an incredibly powerful development. And yeah, I started investing in crypto at that time, and then a few years later, so I stuck around, of course, following the industry during the bear market and everything, and was always convinced that the game theory of crypto at the end of the day is just much more compelling, and basically creating a certain dynamic, which we frankly see playing out with Bitcoin these days, right? It is taking over the world, and now the thing is that we need to be careful that we're not getting overtaken by the traditional world, because they're still bigger, and all of these ETFs, but different topic. But so that is the sentiment which I had investing in crypto, and the early DeFi projects were all about that. And then at some point in 2021, I believe, I also started to contribute to DeFi projects in the space. And yeah, and then that was obviously an experience to really also. My strength was always in mechanism design, meaning basically the shaping the economics of a protocol. And early last year, I left the project where I worked on before, and because I noticed that my sense for free markets and DeFi, that for me, that means just like in early DeFi, it means immutable smart contracts. It means that you actually ensure for the users and for the developers that the system keeps working as it is supposed to work. And frankly, the industry is going in a different direction, increasingly, in my opinion, where everything becomes more adaptable, more malleable, and also the project where I was working on was like this. And at some point, I just couldn't, like integrate this with my philosophy. And so I said, okay, first I took a while off and I was really thinking about, okay, what can I do in this industry? And then I got an increasing idea, okay, where do I want to position myself in the project? And that's basically how I founded Possum Labs.
Gotcha. Just to dive in a little bit to something you just said there, which honestly you're right. I think the industry is trending way more towards like, being extremely flexible and adaptable. I'm kind of like in the middle, right? Where I feel like, you run into you see situations all the time. Like I think like Liquidity is a good example of that, right? So Liquidity V1, was like, all immutable, but they ran into some issues, right? And now they're spinning up obviously, Liquidity V2, but I guess what I'm trying to get at is I think there is a time and a place for some adaptability, but I think you've got to be very, very careful about like what those things are. But I do think that like the core protocol should be immutable because, at the end of the day, and again, this is just for like censorship resilience and stuff like that. Like you don't want to, expose, I think, a decentralized project, right,
Mm-hmm.
to be able to be shut down by
Yeah.
centralized players. So that's my take on it.
Yeah.
But I mean, do you feel like everything should be immutable from day one? Like
Yeah,
no upgradability?
that's a fair point, and I agree. There are some instances where it makes sense to have a more adaptable approach, for sure. I just think about it more in a, I guess, modular way. So there are certain building blocks which, under no circumstances, should be changeable, and then there are certain building blocks on top of that solid foundation which can have different rules. Yes, that's basically my take. So, like the fundamental elements of finance, which is essentially exchanging assets and lending markets, also they, in my opinion, should be not controlled by anyone, be it a DAO or a multisig or whatnot. So the protocols need to be absolutely solid.
I can't disagree with that at all. I can't disagree with that at all. So I guess yeah. So all of this kind of led up to you founding Possum Labs, right? So take us through Possum is and maybe take us through like the current products that you've developed, and then we'll start talking about obviously some things that you've announced recently that are very exciting in my opinion. But take us through like what Possum is and what are some of the products you guys have developed so far.
Yeah, sure. So it's kind of funny, like coincidences happening. So I was, as I mentioned, working on a different project in the past, and quitting there in the beginning of 2023. And then I was thinking about like, what project do I want to build, what product? And there were certain, like I've always been fascinated by and very engaged with liquidity providing on DEXs. Like I think DEXs are second to none the most important DeFi element. And so the liquidity provisioning process always has a lot of friction in different parts, and I'm sure we can get into this a little bit later. But the first product that we actually wanted to build was on top of Uniswap version 3, a way to basically provide a way to have single-sided liquidity. That you can invest with one token and then earn from the liquidity providing. And there was a lot of learning. There was a whole process, took a couple months. We also had a prototype already. Back then I was working together with some contractors on the smart contract development side, Asia, and that didn't work out properly.
Alchemix Finance empowers you to spend and save at the same time with a self-repaying, interest-free, and non-liquidatable loan. Deposit your assets and access your future yield now. Available on Mainnet, Optimism, and Arbitrum. Head to alchemix.fi to get started.
But I also realized that the concept was, it had some flaws, and it would need quite a bit of like re-architecture to justify or to rectify that. And so then I went on vacation actually, and was diving into Solidity myself, because again, like I had at that point already years of experience of mechanism design, and the only like missing link was that I couldn't put it into code because I didn't know how to code or how to do Solidity. I have some background in Python, but Solidity was new for me. And then I, because of that project where I worked earlier as a mechanism designer, which was a Flash Deck actually, and some people of our community will certainly recognize that because we onboarded them via the time rift. I had this background with yield swaps essentially, and upfront yield. Then I was having that in the back of my head, and at that point, the team of Flash Deck was actually moving on to develop a different project. So suddenly there was an opportunity in that segment, because obviously I didn't want to be in competition to a team that I worked with together in the past. So, but that was a new situation, and as it so happened, I was using an idea for an optimized upfront yield system as if you will, training for Solidity coding. And so basically our product Portals, which is exactly that, was my first entry into coding. And that then realizing that I had this system basically ready. Of course, I needed some improvements and so on, but it was basically ready when I came out of vacation. And the other one needed a complete overhaul. We basically made a short-term shift in product strategy, and started with Portals, which is our upfront yield product. That's how the early days were going, basically. Yeah, and that was a great learning experience in a lot of things, right? Both business and also, of course, architecture and development.
Yeah, absolutely. And it's always fascinating for me whenever, we talk to founders on the show. It's just kind of, it always, every founder is kind of different with their journey, obviously, but one thing that always sticks out is like always adapting, right? And always being adaptable to, like, what you learned prior, and implementing that, moving forward to create a better product, or maybe it's fixing the go-to-market strategy, or whatever it may be. So it's definitely like a key characteristic, I think, for for not just for founders, right, but I think for successful people in general. So that takes us, I guess, through like what Possum's developed so far. Recently, obviously, you guys have announced a new product that you're developing called Nexus. I think from your description, right, kind of like solves some of the pairing issues on DEXs, among other things. Maybe walk us through like some of the deficiencies of the current DEX models that you guys noticed, right? And what does Nexus do to like fix those issues?
Yeah, that's a great point. So I'm going back a little bit. One of the observations that I also made in traditional finance is that complexity is always used as a smokes and mirror strategy to show as if you're extremely competent, or if the product is good. And in many to most cases, that's actually not the case. And you drive better if you go simple. And there is a parallel with DEXs and AMMs. So Uniswap has basically established this. There was also Bancor before, I think, and KyberSwap. Like all of them basically were based on the constant product formula, right? Full range, liquidity providing, market making, programmatic, like it's fixed. And the beauty of this system is not only that it is extremely simple and intuitively to understand, at least much more intuitive than the more modern ways, but it is also, and that will surprise a lot of people, it's surprisingly efficient, right? Because the thing is with the constant product formula that it is the most efficient market making strategy if you cannot have any assumptions about possible prices. That's why it goes from 0 to infinity. And the equal balancing, for example, opposed to balancer pools that can be lopsided, like 80-20 pools, that 50-50 pool is like the most efficient in terms of trading fees versus impermanent loss risk or divergence loss. Acknowledging that this pricing curve is actually the most efficient. And then if you go to version 3, for example, where everyone says, okay, that's more capital efficient, which is true in the narrow sense that you get more fees for the same price deviation, essentially. But it also amplifies impermanent loss risk to the same extent. So if you really like calculate the fine print, so to say, then I would question if it's actually more efficient, right? It really depends on what is your strategy as a market maker. And for passive market makers, that's my opinion and also my experience, it is actually more efficient to just, set up a full range LP and be done with it. And so that is the underlying realization of the Nexus, that the full range LPs have a better reputation, but they are actually pretty solid. Certain use cases, right? Again, like it's valid to have all of the different tools at hand for different people, but it always depends on like who's the customer, who's the user. So that is one thing. And then in terms of what are the flaws, so that is just a difference, right? It doesn't mean the others are flawed, but there is again this development in DeFi in general, and that includes unfortunately Uniswap and other dexes these days, that they go away from the notion of, okay, we're here to revolutionize finance, and just plainly embrace traditional monetization models that we have in traditional finance as well, and namely protocol fees. And protocol fees are, of course, there's a discussion, right? You can say, okay, what's the incentive to build anything if you cannot receive value from it? First of all, there are other ways to benefit from or accrue value than extracting it, and also it creates a misalignment of incentives between users and investors, because at the end of the day, users always want the lowest fee possible, and investors always want the highest fee possible while still retaining the revenue. So there's like an optimal point. This is basic economics, but basically they always try to maximize the fee to what the market accepts. And so you just have misaligned incentives. That's very clear, and it is also a centralizing factor depending on how these fees are used. So if there is a DAO, for example, deciding over what the fees are doing, then you inherently have a centralizing force that the DAO, usually capital distribution in any system, is lopsided. Like it's not like if you have 50 participants that everyone has 2% of the tokens, for example, right? So you have maybe one or two people at the top who basically make the decisions, and yeah, that is a fundamental issue. And again, I come from the era in DeFi where the idea was to actually solve these kind of problems. Yeah, that is a shortfall, a flaw in my opinion, that is very structural, and that is one thing that we are also solving with Possum Labs, because none of our products have any protocol fee, and they will never have a protocol fee, because again, it is a structural misalignment of incentives, and instead we are capturing value by using the PSM token as an ecosystem currency, which therefore directly benefits with the growth of the ecosystem.
Gotcha. So basically, right. And just to summarize, I mean, you just said it, but just so I always learn better by repeating it.
Yeah,
Okay. So no protocol fees, but because basically the PSM token is so, I guess, ingrained in the infrastructure, all the value accrues to the token. So therefore, the token price goes up, then obviously the treasury or Possum Labs is healthier because of that as well, along with everybody else, right? That holds the token, of course, and
exactly, and that is
is
the
involved.
essence of aligned incentives or aligned interests, right?
Gotcha. Gotcha. No, yeah, I mean, I couldn't agree more. I mean, and this isn't the same example, but you mentioned Uniswap, right? There's this big debate about the fee switch, and I don't think that people like realize, like, if you turn the fee switch on for uni holders or uni stakers, you're taking fees away from the LPs, right? And then it
Yep.
disincentivizes the LPs to participate in in the LPs, right? And then liquidity could dry up and so on and so forth. So it could actually
That is
become
correct.
a death spiral, right, for,
Yes.
for the protocol if not managed properly.
The thing is exactly with these type of systems that you are building up brand value, and then when you turn on the fee switch, you're basically monetizing the brand value. Because yes, Uniswap will not overnight lose all of its LPs because of a fee, but like where's the dynamic, right? Where's the dynamic going? Is it growing, or is it rather a headwind and hindering growth? And that's exactly the philosophy that we have at Possum Labs, that we design the mechanisms and the incentives in a way that rather propels growth rather than hinders growth.
Pair Protocol is the first and only trading platform for narrative trading. Their technology unlocks the ability for anyone to pair trade. For example, if you think ETH will outperform Cardano, you can long ETH ADA in one click with leverage. Or perhaps you think Pepe will continue to outperform Doge. You can long Pepe Doge. Again, all in one transaction. The combinations are endless. Learn more at beta.pair.garden. Right. So, and I guess just to get into, a few of those mechanisms, and I guess we'll start with the PSM token itself, right? And so I think you said, and I've read that the decision was made that the PSM token will kind of be like the base pairing asset on the DEX, right? Take us through, the benefits of that and the way that you guys see that kind of solving, some of the issues.
Yeah, sure. So, I mean, the elephant in the room is, of course, again, the alignment with the ecosystem as a whole. If the base currency, and PSM, I should add, is a fixed supply token, so at some point we do run out with them, and the only way to get more is to buy them, then if the PSM is the base currency, then growth in the TVL at some point certainly means also growth in price, right? And in some point, to some extent, there is a buffering time, so to say, right? Like, for example, if we, as a treasury pair, contribute TVL with our PSM, for example, with partners on the other side, then obviously that is not price effective. But at some point, depending on where the project is, that maybe sooner than later, these type of mechanisms or dynamics don't exist anymore, right? At some point, it is like literally the free market deciding the value, and again, like TVL growth then means direct value accrual to PSM. So that is the big one. Aside from that, and I actually want to emphasize that, because the DEX itself, it has certainly some innovations on past iterations, but at the end of the day, the DEX is just the heart of the ecosystem. Like, asset exchange is at the heart of DeFi, because it is the liquidity backstop for so many things, right? It's not only organic trading between tokens, it's also, if you have a lending market, for example, with liquidations, how do you liquidate people? You essentially, to make it like secure, you need to have an on-chain liquidity reserve somewhere where you can liquidate bad debt. So DEXs are incredibly important for DeFi as a whole, and therefore also for Possum Labs as an emerging ecosystem. So it is important that we have a DEX, no matter, like, even if you just cloned Uniswap version whatever, it would still be still be important. But we have certain distinct innovations there, or changes to the old model. So one of them is that fees are only charged on the input token if the input token is not a PSM. So, for example, if you buy PSM with Ether, then there would be a fee charged on the Ether that you sell. But if you buy Ether with Possum token, then there would be no fee, no trading fee. Why is that a useful innovation? Because it basically makes dual hop trades more efficient. So let's say you want to swap from Ether to USDC, then in our model, you would only pay the fee for the Ether to PSM swap, but no fee for the PSM to USDC swap. So that means you are not being double charged, which is a problem in pretty much any other DEX. So you have, at the end of the day, as a user, you have less fees. Another side effect of that is that the liquidity providers are earning fees only in that non-PSM token. And that is important for many people. You don't want to, maybe some people don't, are okay with PSM to some extent, but they would prefer to get the fee in stablecoins, for example. And so
Yeah,
that will be
yeah.
very easy.
That's an underrated thing, just based on my experience talking to, hedge funds and stuff like that in this
Hmm.
space. People don't think about it, right? Because most people, like retail users, or most, whales or whatever, they don't care what token it is because they're going to dump it. But for a hedge fund that's got to like be very very strict about their profit, and the amount of risk that they're taking, and things that they can hold on their balance sheet, things that they
Yeah.
can't, that actually becomes a problem. Even if you're only holding that token for, I don't know, minutes, right, or seconds, it becomes a problem.
Yeah.
So yeah, sorry, anyway, I just wanted to say that, but yeah, keep going, keep
Yeah.
going.
No, that is a very useful tool for many things. It has a use for certain actors, as you mentioned, but also on the development side when we talk about composability. So there is another element to our DEX. A great strength of Uniswap version 1 and 2 was the fungibility of the liquidity pool tokens, right? Because you could easily compose them in any DeFi protocol, yield farming whatsoever. It was the reason really why DeFi summer happened, because suddenly everyone could do yield farming with different tokens on the DEX and so on and incentivize it. Sure, most of this stuff was some Ponzi nonsense, but at the same time, it is very important to have this functionality. And with Uniswap version 3 and version 4 is kind of like a hybrid there to say, but it becomes a not so fungible experience, right? Version 3 is very clear with NFTs as positions. And so in our design, we achieve basically that you still have the fungibility of the LP, but at the same time, the fee is actually separated as a cash flow of a single token. And also that is underrated. So getting the fee as a cash flow instead of auto compounding that in the LP, like version 1 and 2 of Uniswap, is very useful for a multitude of things. Like again, first of all, like thinking about the actual practical application, a liquidity provider. There are many people, and increasingly so, of course, as crypto matures, that look for passive income opportunities. And so if you have an LP that auto compounds the fee, that is not passive income. You actually, you continue to be exposed to a certain combination of assets. Exactly. That's the point. If you have a separated cash flow that you can claim whenever you want, I'm not sure if this has any tax implications, perhaps as well for some countries. Depends on the country, but it certainly has a practical implication for these type of people. And then also from a developer perspective now, since I do this now as well these days, it's also much easier to actually create a auto compounding feature on top of a non-compounding DEX for those people who actually want the auto compounding, than to decompound an automatic compounding feature for those who want the cash flow. Like that is a headache. So it makes composability. It basically takes composability to the next level, which is very important for us ourselves because, like again, the DEX, the Nexus, will be a very fundamental piece of the Possum ecosystem, but at the same time it is not like it's not the end all be all. Like this is it is a stepping stone, so to say, for the next product that we build on top of that, or next couple products. I already have a couple ideas. I can tease one maybe, that is the liquidity bonds, which basically goes back to my original idea where we started the very first time last year about single-sided liquidity providing, where you just invest one token and you get an interest rate, right? As the name suggests, that's a liquidity bond. So that is like on a very high level how that will work. But the thing is, we need an infrastructure to build this that is actually first of all aligned with our ecosystem interests, and also let's see, are we back? Sorry, I think I've spotted the internet. We need a DEX as a core piece of the ecosystem to build these type of products on top of it, which offer additional functionality, right? Like the liquidity bonds and others. So in many ways, the Nexus is the logical next step and is very necessary for the ecosystem, for the Possum holders themselves, for the project, and ultimately it is again, this is the heart of DeFi, exchanging assets, and to do this in a incentive-aligned way without value extraction and parasitic business models on top of it, I think that is what we need.
Right, right. And so, I think the big bet, obviously, in my mind, is that because obviously, as a business, right, Possum Labs is going to have to, sell some PSM, right, to maintain operations. I could be wrong, but how do you offset maybe like that selling pressure that may be becoming coming naturally from Possum Labs or other parties that have at the end of the day salaries to pay and businesses to run. I guess the
Yeah.
big bet is, would you be counting on the demand of the PSM token being greater than maybe some of that selling pressure to kind of reach equilibrium or kind of keep the token price healthy?
Sure. So I think there are different layers to that. So one is, first of all, we have extremely low expenses. Like I'm not dumping my tokens. Like that is one thing. And there are basically no permanent partners at this moment that receive any significant amount of PSM. So that means there is no dumping from for organic dumping, so to say. And then yes, so obviously, like the idea is that, or the base assumption under which I operate is that if someone sees a potential in a project, then you would buy the token. And if that happens, then that should be more than enough to cover our operational expenses. Like the main point for expenses in terms of stable coins, where we would actually require some non PSM assets, are audits of the smart contracts. And yes, audits are expensive, but at the same time, they are not astronomical. So that is definitely. I'm not concerned about that at all. If there is any resonance for the project as a whole, right?
Gotcha. No, it makes sense. Makes sense. So I guess my questions always go to like growth strategy, right? And once this is living in the wild, how do you guys plan on competing in the very, very highly competitive DEX environment? You mentioned
Yeah.
Uniswap, obviously. Obviously Curve is out there. Some of these VE33, dexes have been doing quite well lately. What would you say is like your go to market strategy, or like the way that you want to penetrate taking some of that market share away? Obviously, if you're not charging fees, on a good portion of the swaps, I think that should attract traders. But I guess take us through,
Yeah.
that a little bit.
So one is obviously like the distinct characteristics of the DEX itself that have certain value proposition for certain people. And one of them, which I also want to quickly mention, is that LPs can actually collectively adjust the trading fee for the pool that they provide liquidity for between a hard-coded range that will be something like almost 0 to 1%, something like that. So within that range, which is like the range that is valid for the 99.9% of trading pairs, within that range, LPs can adjust freely and on the fly. So again, that is improving on past designs which have a fixed trading fee under all circumstances. So there is the innovation part, which is a natural differentiator and will attract a certain group of LPs and traders. The other side is that I don't really see us competing with the protocols, the cutting edge protocols in their own game. Because again, like the Nexus is focused on full range, 0 to infinity. And basically everyone is developing stuff for concentrated liquidity, or even more complex things like version 4 for Uniswap will be, right? Like these things will be so incredibly complex over time that many participants will only interact with these protocols through a middleware or a third party that is managing their liquidity or whatnot, right? And for those who don't want that, we are here. We will have practically the most simple contract on earth, the most simple DEX on earth, that will also be incredibly efficient. So we are not competing for what they focus on. And I think that is also a potential for great synergies. So, for example, right now we're partnering actually with Ramses Exchange on Arbitrum, which where all of our token liquidity is at the moment. And I don't really see that we try to take business away from them. It's more a synergy that they do the concentrated liquidity part, we do the infinite range liquidity part, and so there is a place for everyone essentially, right? So we don't want to take over the entire DEX market. That's just not what is realistic or our goal even. Yeah, and then at the end of the day, in terms of go to market, we really do want to partner with a lot of protocols that when we get out of the gates, we immediately have liquidity for different tokens. And because we have a treasury with Possum tokens, we are actually in the position to do that because we can just say, okay, we bring the Possum token, you guys bring your own token, and boom, we have created a liquidity pool. And that is, for example, was not possible with Uniswap version 1, where everything was paired to Ether because Uniswap didn't have a treasury with Ether, right? So we have some business advantages there as well that we are prepared to use.
Gotcha. And as far as I'm assuming Arbitrum is going to be the place of business for Nexus when it comes out, or are you guys going multi-chain very quickly?
Likely not very quickly. That depends on many factors, especially also partnerships, and that usually takes a while to build up. But yeah, our starting point will certainly be Arbitrum, and at least from the current situation, what I can see, yes. And then ultimately, though, the potential is there to go a multi-chain, and that's the idea also, to create this ecosystem across basically everywhere where there's DeFi. There should be PossumFi as well, positive sum DeFi.
Absolutely. Can you take me through the governance aspect of Possum as well? I think it's called Core. Can you touch on that a little bit, and where you guys see that taking the protocol?
Yeah, absolutely. So project is managed with multisig, like pretty much almost all DeFi projects, and that is while we don't have any control over the smart contracts like the protocols that we deploy, we still obviously have control over the supply that is in the treasury of the PSM token, and that is increasingly relevant, especially when you create a DEX that has PSM literally as the pairing currency. So the idea is that we fully decentralize treasury decisions to PSM holders. And our first iteration of that, which will probably need like 2, maybe 3 iterations to really be the final version, but the first iteration, the Possum Core, will launch like very soon, probably more or less around when this video goes online. And the idea here is, first of all, we start with a fairly typical staking system, although it definitely has some quirks there. But basically, you stake PSM token, you earn or you accrue something that is called core fragments. That's basically, let's just call it a point. Yeah? You accrue these points, and you can distribute these points to whitelisted addresses. And when you do that, for every point that you distribute, you earn 1 PSM token. So it's like you have to actually distribute and engage in these capital distribution decisions to actually earn something. Just staking will not earn you any return, right? So the idea is to actually engage people in the governance process over capital allocation. And so or rather distribution in this case, right? Because you literally distribute the capital to these addresses. That is the first step, and in the first iteration, the whitelist is controlled by still the multisig. So to have the guardrails and make sure that not just some random addresses are getting whitelisted, some North Korean hacker gets whitelisted or whatnot. So that is the current situation, but we are already like thinking ahead how to make the whitelisting process also tied to give on-chain control, immutable on-chain control over the whitelisting process to the community. And NFTs will very likely play a major part in that role, for the simple fact that with reputation and stuff like that. So there will be a whole different system to that, but that is where we're going, right? So we start with a staking system where people can, where stakers can distribute a Possum, or rather, yeah, it is at the end of the day Possum. 1 point is 1 Possum that you distribute. So they can distribute Possum and earn Possum in return.
Gotcha. And is there going to be a place for any kind of like a delegation system in that as well? So like if you are a if you're a passive investor and you don't want to actively manage or actively vote on every decision, you can delegate your votes to a third party, right? Obviously that's got its downsides too,
Yeah,
from a
absolutely.
centralization perspective. But just curious what your guys' thoughts are on something like that.
Yeah, that's an interesting thought. So, my perspective on delegation is that, well, it introduces the classical politics into the game, which I'm just not a fan of, with this, all the downsides that these type of systems have. So, the idea is that, well, it is not really hard, to visit the website once in a week or once in a month and do a distribution and be done with it, because that's a very straightforward decision. And also, if you are actually participating in governance, the expectation is that you participate in governance, that you don't hand it off to someone else. And the second part to that is that once we have the whitelisting also decentralized, for example, to NFTs, that those are essentially the delegates, because they make the decision over where does the money even can go, and you just make the decision for your part of the entire budget. Where do you think your part should go, right? And this is fundamentally the philosophy behind it, that we give control to individuals, and give control back to individuals, and not increasingly centralize certain decision making processes, because otherwise we could just continue with a multi-sig. Like, there would be no reason for on-chain governance.
Right, right. That makes sense. Well, I think we're coming up on a good place to wrap up, Alex. But before we go, I want to just kind of come back to you for closing thoughts. What can users look forward to coming up for Possum Labs, and for I don't know if you guys have a timeline on Nexus. Obviously, I think you mentioned the core is going to be coming out here very soon. But
Yeah.
what can users get excited about for Possum coming up here?
Yeah, I think definitely, like, the core is a great starting point for anyone who hears this and thinks, okay, this is the direction where you agree that DeFi should go. Then definitely the Nexus will be a great sorry, the core will be a great starting point for you to actually get involved, but also to, of course, earn more Possum tokens in the process, because obviously the first iteration most likely will have higher yields than subsequent iterations, and that's just how adoption curves work. So that is a big one. And aside from that, yes, the Nexus is like the first, I would say, product that will really put us on the map, because we're entering a vertical in DeFi that is huge and has, like, enormous potential for growth. Like, exchanging assets also in traditional finance is huge. If you then put derivatives on top, which of course is the logical extension, that's like the biggest market. So that is really interesting. But in the immediate term, we also have the Possum portals, right? And so if there are listeners who think, okay, maybe this sounds good, but maybe you don't want to part from some of your tokens at the moment, the great thing is portals. The purpose of portals is upfront yield, yes, but how that actually is facilitated is by using the PSM token to basically facilitate the upfront yield. So in other words, you could just simply use portals to earn PSM tokens. And what happens basically is that you acquire PSM without influencing the market price, but the yield of your locked assets will automatically buy back the Possum price over time. So just I would just encourage anyone to look around, see what you like, and how you can use these different money Legos that we are building to your advantage.
Absolutely. Well, for anybody that's listening at home, obviously check out the show notes. You can see where to find Alex, where to find more information on Possum. Alex, really appreciated your time today. I know it's hard to carve out an hour to do probably anything, building in this space. So really appreciate the generosity today. And for everybody else, we'll see you next time on the next episode of DeFi Revelations. Appreciate it.
Likewise, thank you. Have a nice day.